Welcome to AM Best Audio.
With corporate boards facing an increasingly complex risk environment, from geopolitical uncertainty and tariffs to cyber threats and rising insolvencies, Allianz Commercial's research highlights how these pressures are affecting claims, settlements, and market dynamics in the D&O insurance space. I'm John Weber for AM Best Audio, and I'm speaking today with Eric Wedin, North American Head of Financial Lines at Allianz Commercial, about the company's latest Directors and Officers Insurance Insight Report. Eric, so glad you could join us today.
Thanks, Sean. Glad to be here and happy to discuss the report with you.
And I'm looking forward to it, Eric. So let's start off. How are escalating global tensions increasing liabilities for directors and officers?
Sure. So D&Os can be held accountable for misjudging the impact of geopolitical developments on a company's operations, or quite frankly, even failing to control them. It's the responsibility of the D&O to properly adhere to legal and regulatory requirements in the different countries that they operate in, right? So these events are not just headlines, right? They can shape markets, they can disrupt supply chains, and quite frankly, redefine competition. So a company's inability to adapt can cause them financial loss or even reputational harm. So we see any geopolitical instability, it can create challenges for companies, which can have enormous potential to result in corporate or even securities litigation.
So cyber incidents are increasing as a major cause of claims against D&Os. Why is that, Eric? And is there anything that companies can do to mitigate that risk?
Sure. So, excuse me. So cyber exposures for D&Os, they typically arise from the duty to oversee the organization's cybersecurity framework, right? If a cyber incident results in financial loss, directors can face claims from shareholders, customers, even suppliers if the board fails to implement adequate controls. So we have seen cyber risk for D&Os rise in recent years, and there's a greater expectation for board-level oversight due to the trend toward more litigation. These companies and directors are facing a constantly changing and evolving regulatory environment, which can result in regulatory investigations. And these investigations, they can lead to significant fines and penalties for both companies and its directors. Since cyber claims are on the rise for D&Os, it is really important for companies to hire and appoint people with knowledge of cybersecurity and clearly define their roles and responsibilities within the organization. These D&Os must ensure the organization has a formal, documented cybersecurity program that is constantly being reviewed and updated to address an evolving market we see today. So this is a very important topic for all companies as they're operating in the environment of 25, 26, and beyond.
Eric, are PFAS, or the so-called forever chemicals, becoming an emerging risk for corporate D&Os?
Yeah, so we're definitely seeing securities litigation from shareholders alleging that the directors failed to identify potential PFAS exposures and they didn't adequately disclose those risks to the investors. So if we see a stock drop, investors are looking at the D&Os to say, that was a risk you should have been aware of and disclosed, and that can lead to a claim for us. To date, these security actions related to forever chemicals have not been very successful, but the litigation is still really developing, and the potential for additional securities litigation is very likely in our view. Right? Another concern for D&Os, unlike general or product liability claims, D&O policies don't require firm evidence of damages for the policy to actually respond. So while there may not be 100% proof linking forever chemicals and human health, directors can still find themselves defending allegations arising from securities and regulatory investigations. And generally, those costs are covered under the D&O policy. So in recent years, we've definitely seen mounting litigation related to PFAS products, which is related to product safety concerns and environmental contamination.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Now, according to Allianz Trade, global business insolvencies are expected to rise by 6% in 2025 and then by 5% in 2026. Eric, what are some of the liabilities corporate D&Os can face during the following bankruptcy proceedings?
Yeah, so D&O risk exposures are definitely more heightened leading up to, during, and even following a bankruptcy. This is driven by the lenders who can bring claims against D&Os to recover funds they may have lost. Right? At Allianz, we've seen claims from creditors, investors, and bankruptcy trustees, and they're alleging breach of duty by the directors and officers. With the expected rise in bankruptcy filings, we do anticipate to see more claims as a result of this. We also have exposure from shareholders, as there is potential for them to lose some or even all of their investment value in a company if it goes bankrupt. These shareholders can allege breach of fiduciary duty, such as failure to prepare or adequately disclose the challenge a business is facing. Even the suggestion that a business may be in financial crisis can increase the risk of litigation as lenders, investors, and other parties are looking to protect their interests. And we can't ignore the actions and the conduct of directors leading up to a company approaching insolvency. This is going to fall under much more scrutiny by stakeholders once a bankruptcy is declared. And the other thing we do have to remember, even if no liability is found, D&Os may incur large defense costs. So companies are definitely under heightened risk during a company's bankruptcy.
Eric, how do D&O liabilities differ for private companies?
Yeah, so while private companies have less exposure to securities litigation, directors of private companies can still face significant risk while conducting business. Right? As we just spoke about, bankruptcies are a leading source of D&O claims, as well as regulatory enforcement actions. These tend to be the top sources of private company claims. But at Allianz, we also see claims that arise from breach of fiduciary duty, such as misleading or inadequate disclosures. We see M&A related claims from buyers and sellers, shareholders disputes among founders, private investors, and in some case, family owners that have disputes. So even though private companies don't face the same securities litigation of public companies, they're not without their own risk exposures.
So finally, Eric, what's the outlook for the D&O insurance market in 2026?
So generally, within financial lines, the market has begun to show signs of stabilizing in the third and fourth quarter of this past year. There are some segments like private that continue to remain more competitive, but overall, we are seeing a slight shift in the market. Now, with that, we haven't seen much change in the company's buying behaviors. But on a positive note, within financial lines, insurers are expecting to see a slight reduction in the frequency of securities claims in 2025. This information is based on first half activity from the National Economic Research Associates. So we're expecting to see about 216 securities class actions, which is down from the 229, which is a nice positive trend. But while we're seeing the decline in frequency, we are seeing an average settlement value increase pretty significantly this year. So in 2025, average settlement values is right around 56 million, which is up from an inflated adjustment of 44 million in 2024, and the 9-year average of 38 million. So as we're seeing the shift in the market, the hope is that continued stability will remain in the beginning of 2026 and throughout the year as we're operating in the market.
Eric, thank you so much for taking the time to speak with us today.
Thanks so much, John. Appreciate it.
That was Eric Wedin, North American Head of Financial Lines at Allianz Commercial. And I'm John Weber for AM Best Audio.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.